Hi everyone. Welcome to pipsedge.com weekly fundamental analysis review of the currency market. Before getting into details, please read the disclaimer. I am not a financial advisor, and anything mentioned on this channel is not financial advice. Without further ado, let's get into details. In the second week of June, economic data and monetary policy dominated currency market analysis forecasts. Despite a quiet week on the economic calendar, positive sentiments towards the economic outlook significantly drove the Forex market. While the US dollar and Swiss franc emerged as the week's top performers, New Zealand and Canadian dollar closed at the bottom. Followings are the fundamentals that drove the market this week. Global Treasury yields tumbled. Globally, Treasury yields tumbled, dragging down riskier assets. On the other hand, the yen, Swiss and American dollar strengthened. For instance, the US 10 Treasury yield dropped below the 1.5% level. Economic updates. The week was relatively quiet on the economic diary, with the few financial data released over the week providing directions for the G7 currencies. Notably, the US posted higher CPI figures than predicted, the highest in 12 years. As a result, the safe haven currencies led by the USD had a field day on Thursday. Coronavirus news. Thanks to vaccinations and the easing of containment measures, social and business activities rebounded across the G7 nations. In India, the coronavirus infection is declining, but there is an uptick in Thailand and Russia. Worryingly, African, American, and European medical experts complained about new coronavirus variants that could evade vaccines. Crude oil price forecast. Over the week, oil prices improved and, for the first time in 3 years, hit over $70 per barrel in the U.S. Progress in global economic recovery, reduced oil inventories, and declining COVID-19 infections uplifted the crude oil price forecast. G7 leaders meeting. On Friday, the G7 leaders endorsed a global minimum corporate tax of 15% minimum. They also pledged to help the developing countries gain coronavirus vaccines under the COVAX initiative. Other issues addressed in the summit include tackling climate change, expand international development funds to developing countries, and China's human rights abuses. USD strong rebound during the week. The dollar rose by 0.46% to 90.55 but could not break the 90.90 resistance level. Previously, it had increased by 0.12%, closing at 90.136. Market expectations and economic updates ahead of the FOMC policy meeting next week influence the dollar's currency market analysis forecast. Earlier in the week, positive economic data boosted the dollar. JOLT's job opening spiked from 8.288 meters to 9.286 meters, and the trade deficit narrowed from $75 billion to $68.9 billion. The weekly jobless claims and inflation data affected the Forex market on Thursday. Against a 3.4% projection backdrop, the annual inflation rate rose from 3.0% to 3.8%. In addition, consumer prices continued to impress, increasing by 0.7% after a prior 0.9% increase. British pound versus USD forecast. In a relatively quiet week in the UK, the pound fell by 0.35% to 1.4107. In the week before, it had dropped by 0.22% to 1.4147. Laying the week, GDP, trade data, manufacturing, and industrial productions determined GBP currency market analysis forecast. However, traders had to wait until Friday for the data to be released. The UK economy continues to leverage the pound. It rose by 2.3% after a 2.1% previous increase. In addition, trade data also supported the pound as the deficit narrowed from £11.71 billion to £10.96 billion, while the non-EU deficit shrank from £6.55 billion to £5.55 billion. However, while the GDP and trade data figures impressed, production figures disappointed the British pound versus USD forecast. First, manufacturing production dropped by 0.3% against a predicted 1.5% rise. Second, industrial production fell by 1.3% against a projected 1.2% increase. Euro, USD weekly outlook. In the week, the euro weakened by 0.48%, closing at 1.2108 against the dollar. In the previous week, it had fallen by 0.21% to 1.2167. The Eurozone had a busy first half of the week where the German economy significantly affected the USD weekly outlook. After a previous week's substantial gains, German factory orders dropped 0.20%, and industrial production reduced by 1.00%. Furthermore, Germany's trade surplus increased modestly, falling short of forecasts. Negative economic sentiments from the Eurozone and Germany also pressured the euro. However, the sentiments did not taint the currency market analysis forecast ahead of the ECB's policy announcement and press release on Thursday. Eurozone's first quarter GDP provided additional support to the euro. The Eurozone economy shrank by 0.3%, better than the 0.6% projected contraction. European Central Bank announcements and press conferences on Thursday dominated the second half of the week. The ECB raised the Eurozone GDP forecast from 4.0% to 4.6% for 2021 and 4.1% to 4.7% for 2022. However, the bank maintained interest rates unchanged at 0%. Besides, the U.S. strong CPI figures on Thursday ensured the euro had no chance against the dollar. Canadian dollar performance against U.S. dollar. Despite a relatively quiet week, the loonie rallied most days but lost significant ground on Friday. It decreased by 0.061% to 1.2158 against the greenback, while it had declined by 0.07% the week before. Trade data, crude oil prices, and BOC monetary policy sentiments primarily drove CAD forecast. A robust trade data and a rise in crude oil prices propelled the Canadian dollar higher at the beginning of the week. Canadian trade balance improved dramatically from a $1.35 billion deficit to a $0.59 billion surplus. As well, an increase in crude oil prices improved Lonnie's fortunes. However, on Wednesday, the Bank of Canada made a monetary policy that curtailed the strong rally. As expected, the Bank of Canada maintained the current monetary policy at 0.25% and reiterated its commitment to fiscal policy support until a sustainable 2% inflation target is reached. Meanwhile, the bears took charge of the Japanese yen, Kiwi dollar, and Australian dollar's currency market analysis forecast in the Asia-Pacific region. Here is the conclusion. Risk on sentiments dominated the G7 currency market analysis forecast for most of the week. However, the US dollar made a significant rebound on Friday and ended in the green territory. As the world economy and public health continue to improve, traders expect risk on sentiments to drive the Forex market in the coming weeks. That's about it for today. See you next week on Monday. Until then, have a great week ahead and happy trading.